On today's episode, we are going to take a look at two stocks that I believe are a great buy right now, and that's why I decided to add them to my portfolio. The first company is one in the market I'm very bullish on: gaming, esports, content creation, and some of the products that they have I actually use to make my YouTube videos right now. The second stock is one in the virtual communication. It has definitely been a huge growth stock for 2020, and even though I don't believe it will provide the same type of returns it did in 2020, I still believe it will be a better investment for me than the overall market. Like always, make sure to hit the thumbs up. It helps so much with YouTube algorithm, and check the link down below to get your free stock on Webull. If you deposit $100, we both get a free stock. So for each company, we're gonna do the following: take a look at technicals, take a look at future growth, try to understand the business, and then my overall thoughts on the company. So let's get started. The first company we're going to take a look at is Corsair. This is ticker CRSR. For those that don't know, they sell different things like gaming gear, like chairs, headsets. They sell streaming gears. A lot of the stuff they sell here, I use to make my everyday streams, my everyday videos. And most of those products were sold out for a long time. They also sell PC components like memory, like CPU coolers, fans. They also sell gaming PCs. They also own different companies that we're gonna take a look at in a bit. But here again, we can see some of the products they have. We can go through everything from power supplies to fans to mouses. Corsair also owns this company named Elgato. Elgato has a lot of products for the streaming community, like microphones, like these streaming decks, things that I use, lights. They have things to capture your product. A lot of these stuff, like I mentioned, were sold out for a long time, and the streaming community is still growing, right? We're seeing new streamers in the video game. We're seeing new streamers in all different types of markets. Like right now in the stock market, there's a lot of people creating new content, and this type of content creation will continue to grow. They also own this company called Origin. Here is where you can buy customized laptops or desktops. They also own this company called Scuff. Here is where if you want to make professional controllers for the console system, if you want to improve for example, your Xbox controller, your PlayStation controller, if you want to customize it some way, also customizable headsets as well. A lot of professionals play with these types of controllers in the big leagues, and obviously if professionals are playing it, your kids, your brother, your little sister, they're going to want to play with the same type of controllers. Finally, the last thing they have is Gamer Sensei. And Gamer Sensei is, let's say you are trying to become a professional in some type of game. You want to take your game to a next level. Here is more like you finding a teacher to help you learn about Fortnite, help you learn how to be a better player at League of Legends. So like I mentioned, they're hitting the streaming community with Elgato. They're hitting the gaming community with all the products they sell. They're hitting the esports with this Gamer Sensei to help people become better players. Now, if we take a look at the company, right now, this is ticker CRSR, Corsair Gaming. Right now, it is trading at $38.38. It was up 4.5% for the day. I honestly got lucky, I would say, and I purchased early on in the day, and the stock price was pretty much flatline when I got in. If you guys want to know when I buy, make sure to follow my Discord channel. It's free to anybody that wants to join, and I post every time I buy and sell there. Right now, the market cap is about $3.5 billion. This is a recent IPO. It started in September. Since then, it has returned about 200%, but from its all-time highs in November, it is down 25%. So it has definitely pulled back a nice amount. We can see ever since November, the stock price has not really moved much. If we take a look at technicals, right, the two things I'm looking at, is there plenty of volume? Yes, there's a lot of volume within this stock price, but we saw, right, it's been pretty flatline since December, so it's kind of like just been building up volume there. The second thing, is it overextended? Right now, I want to say no. The stock price is not overextended at all. So that was definitely one of the major reasons I ended up adding more exposure. If we take a look at future growth Analysts expect this company to grow 9% on average for the next 3 to 5 years. Not a heavy growth stock like some of the other stocks I look at, but it's still growing at respectable levels. The company is profitable and they do have positive cash flow from operations, and that seems to be improving as earnings also improve. If we take a look at their financial statement, they have about $116 million of cash and about $370 million in debt. Remember, they are profitable and they do have positive cash flow from operations. So for me, it's okay for them to have this kind of cash to debt ratio, especially since most of their assets is some form of inventory as they continue to sell their products. We did see some recent news with Corsair. In their most recent earnings, which were November 10th, they saw about 61% revenue growth. Most of it came from the game creator and peripheral revenue. That was up 129% compared to the same time last year. The gaming components and systems increased 38% compared to the same time last year. I do believe, obviously, because of COVID situation, it has helped this company grow a lot faster, but I do believe content creation is still a thing. So many people want to start new YouTube channels. So many people want to start streaming. So they are going to go and buy the products that Corsair happens. So I do believe this is a market that will continue to grow. So I am very happy with my Corsair purchase, and I do believe as this year continues to go on, when I keep seeing it at a valuable price, I am going to continue to add. I don't have unlimited funds like most of you. I put money to work on a weekly basis. So every week I put either a few $100 to $1,000 a week to work, and I split it out in some companies to increase my overall exposure. Corsair right now is probably a tier 3 stock in my portfolio, but it has the potential to be a tier 2. It would never be a tier 1 in my portfolio. So the second company we are going to take a look at is Zoom. This is ticker ZM. They have a nice amount of products, but most people know them for just the overall video conference things. Their product is used in many industries from education, finance, government to healthcare. And obviously this has been a good pre-COVID play just because everybody's working from home and stuff like that. But I do believe even after we go back to work, a lot of the businesses that have used Zoom are going to keep this product. For example, my company where I work at, we have moved into Zoom, and I don't believe, and we're seeing a lot of most of our workers moving back into the office, and I don't believe we are going to stop using Zoom. So again, they have this COVID has helped them kind of fast forward their company, and I do believe we're not going to see the same type of growth that we saw in 2020, but I do believe growth will still be strong for Zoom compared to the overall market. Zoom right now, like I mentioned, is ticker ZM, and is sitting at $383. Right now it has a market cap of $111 billion. In the past year, the company has done amazing. It has returned about 425%, but from its peak, the stock is down about 33% from its all-time high. So it's lost about 1/3 of its valuation from its peak. And we can see very similar to Corsair since November, actually since I want to say September, right? We can see here from early September, the stock price has been very volatile, but is still sitting within that range of high 300s, low $400. So if we take a look at the charts, again, I'm looking for two things. Is there volume? Yes, I can see right now there's plenty of volume within this stock price that's sitting right now. The second thing, is it overextended? No, Zoom right now is definitely not overextended from its moving average. Again, giving me another positive reason to continue to add to this company. So Zoom right now is expected to grow 25.8% on average for the next 3 to 5 years. It is profitable and it does have strong cash flow from operations. This company is pretty much printing out cash. It's printing out more cash than the Fed. Obviously, that's not a fact, but it was a pretty funny punchline to add here. Right now, the overall balance sheet is amazing. This company has about $2 billion in cash and has no debt at the moment. This is one of my favorite balance sheets right now. It's definitely pretty impressive. Another thing I want to talk about is their ownership. Their CEO is also the founder, owns about 15% of the business. That, again, in my opinion, is another bullish note for Zoom. If we take a look at historical growth for for Zoom. In the most recent quarter, it grew 366%. The quarter before that, 355. The one before that, 169. And those were 3 quarters affected by COVID. But what were the quarters before COVID? How did they affect? On December, it was 77%. The quarter before that was 84%. The one before that was 95%. And the one before that was 103%. So the quarters before COVID situation all started to take place, this company was growing at triple digits. So I don't believe, like I mentioned, Zoom is going to continue to have that type of growth, but I do believe it's still going to be stronger than the overall market. Another thing we're seeing is profit margins have increased. If we take a look at at trailing 12 months, and their cash flow from operations trailing 12 months values are increasing. Look, as their revenue is increasing, the amount of cash flow from operations that they're grabbing is insane. If we take a look at their operating cash flow margins, their operating cash flow margins of trailing 12 months have been 60%. This company, like I said, pretty much prints out cash at the moment. There have been some recent news for Zoom. First is they did do about a $2 billion public offering recently at $340 stock price. This was about a week ago. And to me, the only reason a company like this would do a $2 billion public offering, we saw they had plenty of cash. We saw they had no debt. It means they're gonna do some big acquisition or some form of acquisition in the upcoming quarters. That's my gut feeling is telling me, and I'm hoping it's gonna be something great. Some other things we're seeing is in early January, Zoom reached over 100 million Zoom phone seats, seeing that strong growth. Other thing is this company is just expanding into different markets, soon to expand its presence in Singapore. And to see that form of expansion there, in my opinion, shows that, hey, Zoom is still growing here and still has a lot of international growth to go. So these are 2 stocks I purchased this week. I also got into some small cap companies. Make sure to check out that video before. And if you guys want to learn more about becoming a better investor, make sure to check out my Patreon, where I put down weekly educational videos, and follow me on Twitch. I stream every Mondays and Tuesdays and one day on the weekend. Oh man, you guys can ask questions about any stocks you guys want. Take care guys, have a good night, and see you next time.